Hello and welcome to episode number 35 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we will be discussing two major stories that stuck out to me during Monday's bloodbath of a day for the technology sector, including headlines that might have Tesla, AMD, and Nvidia investors concerned. First up, we saw Tesla slump again on Monday, adding to a month-long decline that has watched the automaker shed nearly 25% of its value. Of course, the first quarter of the calendar year wrapped up over the weekend, and according to a new report from Morgan Stanley, Tesla probably fell short of its self-supplied estimate of 10,000 Model 3 deliveries in the period, and may have lagged its target to end March at a 2,500 vehicle per week delivery rate. In fact, the analyst firm said it's not really a question of if Tesla missed, rather what the magnitude of the miss was. That was said in a note to clients on Monday. A Bloomberg story added more context to these projections with its Model 3 rollout tracker that estimates production numbers using VIN numbers from the vehicles themselves. The publication said its tracker estimates that Tesla was making about 1,190 Model 3s per week as of Sunday. That's almost 1,200 Model 3s, and may have produced almost 9,300 of the cars in the quarter. So obviously both those numbers are lagging the aforementioned estimates that Tesla provided or goals that Tesla provided. Bloomberg did note that that would not include any late surges in production, so it might be a little bit off. But the news that Tesla may be behind on the production schedule for its integral Model 3, which has actually already been delayed, joins a growing list of near-term concerns for the electric vehicle maker. As an aside here, I know this is an automaker, a car company, but with its kind of status in the technology sector as well as kind of a bellwether of the both the electric vehicle and autonomous and smart car revolution, and its exposure to other things that we care about in the tech sector like batteries and solar as well. I do love to lump it in with a lot of the other bellwether tech stocks, and I feel like it does have a place for us to talk about it here on Zach's Tech Talk Tuesday. But as I said, a growing list of near-term concerns for the company. First up, Tesla is facing heightened scrutiny for its autopilot feature after a fatal crash involving a Model X vehicle that had the driver assistance system engaged. Tesla actually said last week in a blog post that the driver of this vehicle ignored several visual warnings and one audible warning in the seconds before colliding with a highway divider, kind of the company working to shift the blame away from the autopilot feature. And this disclosure actually caused a bit of a spat between Tesla CEO Elon Musk and the National Transportation Safety Board, as the NTSB ridiculed Tesla for publicly sharing details of an ongoing investigation, and Musk responded by downplaying the agency's role in policing these issues and suggesting that cooperating with the NHTSA is more of a priority. Meanwhile, Tesla was also recently forced to recall all 123,000 Model S vehicles built before April 2016 in order to retrofit a power steering part. That massive recall actually came shortly after Moody's downgraded the company's corporate family rating to B3, sending unsecured bonds to an all-time low. So concerns about Model 3 deliveries are really just a piece of the puzzle here. We also have mounting debt issues, credit rating concerns, a recall concern, and heightened regulatory scrutiny of the autopilot feature. Kind of a disastrous, nightmarish 5 or 6 day stretch for Tesla. And this is all just a small piece of what has been a worsening analyst snapshot for Tesla for quite some time. Wanted to say that within the past 60 days, a number of negative revisions to the company's full-year earnings projections has sent our Zach's consensus a staggering $2.90 lower for the company's full-year earnings. I believe on an adjusted non-GAAP basis now, Tesla is projected to post a full-year loss of $7 per share. So certainly some concern there. Elon Musk on Twitter on Sunday, on April Fool's Day, made a joke about Tesla going bankrupt. I think people with serious concerns about the credit rating and the bond issues that I mentioned. Did not find that particularly funny. And then on Monday, shares sold off even more on the back of this kind of negative analyst sentiment coming from Morgan Stanley. So definitely some interesting things coming out of Tesla and Elon Musk. And you can really start to feel this bear case for the company building. It's been such a popular stock over the past few years, and investors have been so quick to disregard these production delays and this stretched valuation and a lot of Musk's kind of lofty comments and some of his more ambitious tweets that don't really come to fruition. We've ignored all those over the past few years, and we've just trumpeted Tesla as the hero of the electric vehicle revolution. Now we're starting to see the script kind of flip here, and the bear case seems to be really generating some momentum. Tesla dipping to another new 52-week low on Monday. But that was far from the only story that tech investors were talking about on Monday. Amid another brutal day of trading for the newly volatile sector, investors are also focusing on the latest slump in shares of NVIDIA and AMD after reports suggested that a decline in cryptocurrency mining could be negatively impacting the GPU market. Obviously, we've talked about cryptocurrencies on the show before. We've talked about the mining process. I think I've also worked to mention how AMD and Nvidia have some limited exposure to this industry. So hopefully this is all stuff you guys are familiar with. But according to a Morgan Stanley analyst Joseph Moore, falling Ethereum prices are starting to suck the life out of GPU demand. So this is a pretty popular digital coin. It actually dipped to nearly $370 last week after peaking as high as $1,300 earlier this year. So obviously really underscoring the crazy volatility and up and down swings we've seen in cryptocurrencies there. And, we've seen the entire crypto market suffer from profit taking and increased regulatory concerns over the past few months. But volatility in this specific coin could be having a unique effect on GPU makers like AMD and Nvidia. The mining community for this coin, which remains the second largest crypto in terms of total market cap, continues to rely on these high-powered GPU processors, while miners of other digital assets and tokens have moved to more expensive, purpose-built machines. This has stayed kind of as a popular digital asset for what are called GPU mining rigs. But with prices at their current levels, the economics of mining are starting to make less sense given the overhead costs associated with running these rigs, including device maintenance and electricity. Again, this isn't just free money being generated out of nowhere. These miners are using plenty of power, and they're building really expensive computer rigs, and that obviously costs a ton of money. So the price of the associated cryptocurrency has to be high enough that the economics, make sense for the miner to be spending that time and money, actually mining the cryptocurrency itself. So Moore and Morgan Stanley see the lack of incentive to mine having an effect on the price of the GPUs used in these rigs. Top crypto mining cards from AMD and Nvidia were very recently difficult to get one's hands on, but now the prices seem to be starting to slump. According to Morgan Stanley, the cost of AMD's Radeon 580 is down from $530 to just $399 on Amazon, while the price of NVIDIA's GeForce 1060 is down from $500 to $399 as well. This analyst note did mention that the impact of sluggish cryptocurrency demand is likely to have a bigger impact on AMD's business, with Morgan Stanley's research suggesting that AMD saw its exposure to this industry move to about 10% in the fourth quarter. I believe company management said overall for the latest fiscal year, its exposure to crypto mining was in the mid-single digits. We have explored some of what's going on with NVIDIA's exposure. NVIDIA's management team much less thrilled about being asked these crypto questions. I would advise you to dig into their latest earnings call. I believe Jensen Huang, the CEO, said that they model cryptocurrencies at approximately zero, essentially, in terms of having an impact. From what I understand, NVIDIA's cards get lower hash rates than AMD's cards. So AMD's are preferred by these GPU miners. And so NVIDIA would have a little bit less exposure there. And I know NVIDIA has kind of worked to distance itself from that in terms of how they consider cryptos and whether they consider crypto mining being a kind of growth catalyst over the next few years. They have their eyes on different things. But still enough to contribute to some of the sell-off that we saw on Monday. Again, this is a lot of market-wide pressure as well. As tech stocks go in mass, you're going to see this play out, even if there is not any devastating news to these companies specifically. But yeah, I thought these two headlines involving Tesla and then AMD and Nvidia were certainly some stories that helped contribute to the bloodbath on Monday. Tough to call whether this is the bottom. Feels like the previous bottoms we've seen over the past 2 months. People have been, a little bit quick to call, all right, this is where the sell-off stops. I'm not going to do that today just because I simply don't know right now. But I think as we start to head into earnings season, if company guidance was correct and if the bullishness about these tax cuts were correct, then we should see another strong earnings season later this month. And hopefully strong earnings and revenue growth will be enough to kind of break up some of this choppy trading and get the bull run headed forward again. That does it for me this week. As a reminder, if you feel that we missed something or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. As always, thank you for listening to the Zacks Tech Talk Tuesday show. We will see you next time.